Most beginners think that trading is predicting the market, but it is absolutely not. It's about answering these three different questions that have three unique roles in your trading. So if you learn one of them, but you don't learn the others, you're probably going to keep losing for no reason, right? Losing is normal in trading, but we want to avoid unnecessary loss like the plague, and this is one of the best ways to do it. So if you are a beginner, I encourage you to stick around to the end of the video and even drop some notes in the comments for those who are going to watch this video that need some notes and want to stay on exactly with the points that I'm making. Definitely make sure to drop some notes down below. So let's go into the three parts that you see here on the screen. First is fundamentals, right? Fundamentals are telling you what to trade. Technicals tell you when to trade. And sentiment tells you how risky it is to trade right now. So just because you know what you should trade does not mean that you should be trading. The reason why is because if your fundamentals are all in line, but when you trade is out of line, all your trades will be off, even if your fundamentals were right. But even if you know what to trade and when to trade, but you don't know how risky it is to be taking that trade, then all your trades are still off. They're literally still off. So that's why we're going to go over this in this video. Now, these are your notes for right now. Your fundamentals tell you what to trade, your technicals tell you when to trade, and your sentiment tells you how risky it is to trade right now. So these three things do not compete. They do not compete with each other. What these three things do is they actually work together so that you're not making guesses when you work. If you miss one, even a perfectly good setup can still wreck you. So the way that I like to think of it is my fundamentals are first. And then my fundamentals, then I use my technicals. After my technicals, I use my sentiment. And I just keep going in a big circle like this. That is what I do when I'm generating my trading ideas, when I'm thinking of what I want to be trading, when I think of what I want to be doing, when I think of what trades I feel like taking. That's what I'm doing. I'm going to continually make sure that I am doing these three things, because if I always know what to trade, but then I get in at the wrong time, or I get in at a time that's too risky, well, then there was no point. I actually just wasted all of my time and probably wasted my capital. And that's what I want to save you from doing. So ask yourself an honest question. Which of these do you rely on the most right now? Personally, I used to rely a lot on sentiment, but once I learned the hard way that fundamentals and technicals also matter just as much, and you have to do all three, that's when my trading started to really improve. So comment down below and be very honest, because I was there too, and we're all going to be able to understand these fundamental, technical, and sentiment and how they work all together. So the first thing is fundamental analysis, right? Because I said fundamentals go first. Let's start with fundamentals, okay? So when you're thinking about your fundamental analysis, fundamentals are about the health and expectations of an asset, of whatever asset you're trading. So you're not guessing with your candles. You're actually looking at earnings reports, you're looking at revenue, you're looking at margins, you're looking at debt, you're looking at the actual industry trends, and you're looking at some macro data. So macro is big, it's on a big scale. Macro kind of zoomed out, showing you a bigger picture, and macro data can be like interest rates. It can be news, which you can find on forexfactory.com. You can find a lot of different news on there. And the question here that fundamental analysis is going to answer is this asset fundamentally strong or is it weak? Okay? That's all we care about. Is it strong or is it weak? So if we go back to our notes, we know that fundamental analysis is supposed to answer the question of what to trade. So are we trying to trade stuff that is weak or stuff that is strong? Well, it depends actually. You don't always pick a strong asset or a strong stock. Sometimes you need to trade something that's weak because sometimes something that's weak is about to fall apart. And when something falls apart, some asset falls apart, some stock is falling apart, some part of an industry bubble is about to pop, well, that's a really great opportunity to take advantage of a very weak asset. Now, sometimes, it depends. How long are you trying to hold this trade for? Are you a investor and you're actually not trading at all? Or are you a buy and hold in the middle of like buy and hold and investor, right? Or are you just simply a trader who's going to sell off their stocks within a month, like a day to a month of having their stock, right? So that's most of us. Most of us are retail traders, or who are going to be day trading or intraday trading or hold a swing overnight or up until like a month or two, right? That's most of us. So it really depends. Are you trying to find something that's strong because you need to hold it long term and you need something that's going to put you into more profit and be bullish over time? Or do you want something that is weak? So you learn all those things by looking at a company's earnings. You know how weak or strong it is by looking at its earnings, by looking at its revenue, by looking at its debt, by looking at its trends, by looking at the news associated with it, okay? So if you think about in example, if you look at this here, right? You think about company A, you think about company B. Now, company A has some strong revenue and they're in a strong sector like tech, all right? Your bias might be for longs because that's strength, but you might have company B who has terrible earnings, who has revenue that's shrinking. You might want to go in for some short trades. You might want to try to short those, short that stock, or short, maybe you found a few inside of an industry, right, that are similar. A few stocks or a few, something in the equity market, some asset in the equity market. You're going to use that as a reason to take some shorts. So again, your fundamentals tell you direction only. We're not trying to time our entries. We're not trying to figure out anything else. We're just knowing the simple question that we said before, which was fundamentals tell us what to trade. So we're trading strong or weak. Now, let's move on to our technical analysis, right? Which is our second in our flow chart. So we finished our fundamentals and now we're going to look at our technicals. Now, what does our technicals mean? Our technicals are about price in motion. You're going to look at price, volume. This is where some of your indicators come into play. Okay? Pay attention to your indicators a lot. So we're going to look at price, actual price action, trends, support, resistance, market structures. Are we having more reversals or more continuations? All right? You're going to look at your buy sell volume bars that you can have on your trading view chart. If you haven't watched my trading view, how I set up, like, it's basically a video on my trading view settings. If you haven't watched that video, go ahead and watch it. And I show you how to put your buy sell volume bars on your chart and other indicators. You might want some other indicators like your VWAP. You might want a moving average exponential or moving average simple. I talk about those in that video as well. And I also have some other resources on my channel that talk about moving averages and what they actually are. But for this video, the technical analysis is going to answer one specific question. And it is, what are traders actually doing right now? So if we remember, Our technical question is when to trade. So, for example, you could be bullish fundamentally, and then price pulls back into a known support level. All right, so let me draw this for you. Okay, so right now we're bullish fundamentally. We looked at their earnings and they have great earnings. Okay, cool. And their revenues expanding. Okay, cool. Price pulls back into a known support level. So let's say we have something like this. We're just trending up. And then coming back into a support level. Somewhere where price previously did not want to go below. Then volume stops or volume disappears or people are not in this trade anymore and buyers are going to step in. Right? Because when you come down to a support, previously price doesn't want to go below, we can assume, oh, it's doing a retest or it's doing a pullback into a previous level to set up for some more continuation into the whatever direction it would be. In this case, it would be bullish. So you're using your fundamentals to choose a side because we said, oh, this company has great earnings. This company's in a great industry like tech that's very strong. Okay, cool. And then we use our technicals to choose the moment. So in this moment, we're looking at the price action and we saw our volume was great. We saw that the trend was already going up, right? We saw that maybe our EMA was something like this, holding above. Let's just assume that's kind of how our EMA looked or something like that. Okay, perfect. What that's showing us is that technically this is a really great trade. So we're seeing volume dry here. So volume is a part of technical. We saw our price is continually going up. That's part of our technicals. We're looking at our EMA. Our EMA is showing us we want to go higher. It's holding above our 100 or our 20 or 15 EMA, whatever. And then price pull down to a support level. Okay, so that's part of our technicals. We use all those things to come to the conclusion that, if price is showing us all these things and volume is showing us all these things and all of them are making sense together, then we kind of know where we might want to buy in. And again, our question with technicals is when to trade. So just because you see fundamentally the company is strong, then that doesn't mean you just buy in. Because guess what? What if it was coming up and then you entered here? What if you entered right here? Oh, you're done for. You're super done for. Why? Because price immediately pulled back into a previous support. So it's important that you actually use your technicals to know what direction to be in, and not only be in what direction, but when to actually enter. That's why we're using our volume. We're seeing how volume is interacting. We're seeing how resistance and support is interacting. We're looking at price. We're looking at how all these things move together. Because if you have one misstep, your overall bias that the price was going up doesn't matter because you got in at the wrong time. And your technicals are going to show you where the timing lives. It's going to master your timing. It's going to make you stop throwing away really good trades. So I want you to answer this question. Have you ever entered a trade too early thinking the trade would just continue? The trend would just continue. It's just going to keep going up only to get stopped out. Comment yes if this has happened to you, because it's definitely happened to me. And that's when you're getting in on the trend at the incorrect time. That's why technicals are so important. All right. So now let's go ahead and look at our sentiment. So what is our sentiment? Our sentiment, like we said before in our notes, let me scroll back up. Like we said in our notes, our sentiment is How risky is this trade to take right now? So we see this company has great earnings. We see we just pulled back. Yeah, so we're let me actually do this here, right? We saw our company had some great earnings, so that checks off our fundamentals. And then we saw that we are now pulling back into a support zone, so now it's setting up to go higher. We're going to watch our price, we're going to watch our levels, we're going to watch our support and resistance, we're going to watch our indicators, we're going to watch our trend and our volume bars, all our indicators. Cool. But now we need to know how risky is it to actually take that trade. And now that this is how we're going to wrap up this video. If this video has been helpful to you, make sure to drop down below, all the things that are kind of poking out to you that you're like, oh, this is a good takeaway that I've had. Make sure to subscribe to the channel, of course, to make sure that you're not missing another video, because I post videos every single day and I don't want you to miss a session. I go live on my channel recording my live session, so make sure not to miss that, and make sure to subscribe for not missing out on those videos that I use all of these tips in. I use this fundamental analysis to technicals to sentiment and this huge circle every single day in my trading. So to see all this stuff put into actual play, make sure to stay tuned to my channel. So the question is, how risky is it to actually take this trade, right? If I want to get in here, how risky is that? If I want to get in at this yellow dot, right? That would have been super risky. But what if I want to get in here? What if I want to get in at this green dot? Well, how do you actually know when? How do you know it's jump time? It's time to press buy or sell. Okay? So sentiment is going to tell you who's already in the trade and how crowded the trade is. This is going to help us to understand some exhaustion. Where does our trade actually want to go, right? It's going to show our interest. Who's interested in being in this? And are they going to run out of interest pretty soon? And then I end up catching another pullback, or I catch the end of this trend. How do I know it's going to keep going, essentially? So options positioning, your put and call ratios, your fund flows, your short interest, your narrative in the social media, your narrative, right? That is what turns the markets, not just fundamentals alone, not just technicals alone. So when you're looking at a trade that is moving, right, it can really be on, hey, like something with the fundamentals is making this stock drop, or something with the technicals is making the stock drop, or maybe it's something with the sentiment that's making the stock drop. But you have to know. You can't just say, I'm going to hold this trade because I feel like holding this trade because I got to hold this trade to just hold this trade. You have to literally have a reason for it, which is going to let you know your proper overall sentiment. So your strong fundamentals and a clean technical setup is what we have right now. Okay. And now Trump just said that he's about to, start allowing people who are 15 years old to drive. Now we have some extreme hype over the newest car that may be coming out. I don't know. I'm trying to make up something that doesn't actually relate to the real market, because then that would just be confusing. I'm trying to come up with something fictional. But let's just say let's choose another example. So let's say Trump said everybody gets no taxes for a year. Okay, cool. The hype is amazing. Everybody has so much money now because they don't have to pay taxes. So they're throwing all their money into their portfolio so they can buy stock, because they want to use their money, and all the money they would have put to taxes, they want to now put it to stocks. Okay, cool. Now everybody's buying into this trade, and where everybody's staying long. Why is everybody staying long? Because everybody wants to be in this trade. And this line is here. This line is not supposed to be here. Okay, there we go. So what does it mean? Everybody is hyped up. Everybody's in this trade. The fundamentals are already good. The technicals are already good. Cool. So this doesn't mean that it's not a good trade because everybody's already in it. It's literally about a smaller position, a smaller or another word is tighter risk, where you're actually sizing down. So maybe you're not doing 10% of your account, you're doing 5% of your account on a contract. So you get to respect the trend and respect who's already in the trade without trying to fight what they got going on. So the markets are rarely going to turn because of a fundamental change, but they turn when everybody who wanted to buy already bought. And now everyone's exhausted. Everyone's ready to get out. We don't know what's happening next. It's been overhyped. So understanding your positioning, aka your sentiment, keeps you out of really crowded trades that are about to crash anyways, and helps you from getting in on the tail end of something that people have already been hyped about and they're already interested in it, and you're catching the end of it, because you don't want to catch the end of anything because you might just get swiped. Right? So if something's already happening and now you're jumping in, you're too late. And this helps you from being too late. So ask yourself before your next trade, check your positioning. Who's already in this trade and how crowded is this trade? Is essentially what you want to ask yourself. So the common beginner mistake is that you're going to use fundamentals to, let me say it this way. Most beginners use fundamentals to time their entries, and they use technicals to predict long-term value, but then they ignore the sentiment, and that's very backwards. So if you fix that and you use all three, the sentiment, technical, and fundamentals all together, then you not only know why you're in a trade, what trade you're in, when you're in the trade, how exactly you're in the trade, and how dangerous it is to be in it, and when is it probably going to be over. And that all together is going to give you clarity in your mindset, because you absolutely 1,000% do not predict the market, and you can't. You don't need to. You need a structure that's going to help you to pick your side of whatever you want to be in. I mean, there's really a 50-50 chance. It's either going to go up or go down. Rarely is it ever going to go sideways for your whole trade, especially if you are timing your entries properly. So if you tend to get into a trade and it's reversing on you, well, you might have to check your fundamentals and your technicals and your sentiment. See which one is going to help you the most. See which one you need to switch and check. And I think that you'll know as soon as you start to, exercise this flow chart. So I will see you guys in the next Watch and Learn. Thank you for watching. And as always, make sure that you are paying attention to the market, that you're being safe in the market, and that you're educating yourself on the way that you're trading, because you're probably trading with your own capital. And we want to make sure that we are using the things that are going to help us to understand trading in the best way possible. Like, our precision matters so much. Our candlestick literacy matters. Where we place trades, how we enter them, how long we keep them, how long we hold them, all that matters. And so if you're a beginner trader who's been thinking that trading is about predicting the market, I hope this video helped you to understand that it's definitely not. And I hope that the 3 questions that I gave you helped you to understand the unique role of each one of these words that I give you, even though they're kind of big words, like, just words that we use in the industry. But I hope this video was able to help you understand, fundamental sentiment and our technicals a little bit more.